Welcome back to MB Capital Strategies. Today we continue with the mining series, this time focusing on Gerdau, one of the largest steel producers in Latin America and a classic stock that is often misunderstood. No growth hype, no tech story, and no ESG marketing, just steel, industry, infrastructure, and cyclical cash flow. Right now, at the beginning of 2026, Gerdau is particularly interesting. Many commodity and mining stocks have performed strongly and valuations have risen. Gerdau, on the other hand, is trading at fair value with low multiples and a clearly cyclical profile. So the key question is Gerdau an attractive cash flow cyclical stock or a classic steel trap? Here too we'll take a look at how I am invested. In total, I hold 112 shares at an entry price of €2.72. A total of €304.94 invested, currently receiving a dividend of €9.73. Overall, I am sitting on a price gain of €78.10 here. That corresponds to a plus of 25%. The 52-week high is between and the low is between €2 and €3. Investing Pro sets a price target here of €4.46. I do all my fundamental analyses with Investing Pro. If you also want to use Investing Pro, you can find the affiliate link below in the video description. By using my link, you get 15% off and you support my channel. Gerdau is not a mining stock but a steel producer. The company produces long steel for construction and infrastructure, as well as special steel for industry and automotive. The focus is on Brazil, the USA, and other parts of Latin America. Important, Gerdau is highly regionally diversified and not solely dependent on China. This sets it apart from many other steel companies. No aggressive growth, no risky capex bets, but rather existing facilities, optimized capacity utilization, and a focus on cash flow. Steel is highly cyclical. When construction is booming, infrastructure programs are launched and industries invest, margins and cash flow explode. When the economy weakens, construction stops and demand falls, profits here quickly collapse. You can see this very clearly with Gerdau as well, and this is not a disadvantage, but exactly what you need to understand. Gerdau thrives on timing the cycle, not on steady growth. Now let's look at the big picture and not get distracted by quarterly noise. Most recently, revenue was around 10 to 11 billion US dollars. An EBITDA of $1.4 billion and an operating margin in the mid-single-digit range. What does that mean? Gerdau is profitable, but not a margin monster like tech or mining elite stocks. In boom phases, margins rise sharply, but in downturns they fall noticeably. That's normal for steel. The crucial question is, does the cash flow remain positive? And yes, it does, even during weaker periods. Now we come to the most important point. Gerdau generates around 1.7 to 1.8 billion US dollars in operating cash flow. Free cash flow remains positive, but fluctuates. This shows two things. The business model works operationally. Cash flow is cyclical, not as predictable as with pipelines or rates. Important. Dividends, debt repayment, and investments are paid from real cash flow. No financial acrobatics and no debt tricks. Gerdau's balance sheet is solid, but not a fortress. Net debt is moderate, debt is actively managed, and there are no acute refinancing risks. This means Gerdau can weather a normal downturn, but it is not a safe haven in a severe recession. That's honest, and that's exactly how you should view this stock. Now to be clear, Gerdau is not a dividend anchor, not a steady payer like utilities. The dividend here is cyclical and the payout follows the cash flow. Currently, we have a dividend yield of about 3 to 5% and significantly more in boom years. In weak years, it's less, and that's honest and also sustainable. If you're looking for constant monthly dividends, this is the wrong stock for you. If you can accept cyclical cash flow, this stock could become interesting. The current valuation, we have a PE ratio of 6 to 8. We have an EV/EBITDA between 4 and 5. That's cheap, but not without reason. The market is pricing in cyclicality, but for investors who understand the cycle, this is exactly the point where contrarian thinking pays off. If we look at the benchmark here again, in this case blue would be the benchmark and red would be Gerdau. You can see that Gerdau rises nicely along with the benchmark. The risks with Gerdau are an economic downturn, a decline in steel prices, dependence on construction and industry, and emerging market risks, namely Brazil. But we have no balance sheet stress, we have no existential risk. The risk is volatility, not insolvency. Gerdau is not a buy and forget dividend stock, not a growth play, but a classic cyclical cash flow stock, attractive at a fair valuation, interesting as a supplement, but not as a core holding. My assessment: Gerdau is suitable for investors who want exposure to industry and infrastructure, understand cash flow, and can tolerate volatility. Not for everyone, but at the right time, it can be very exciting. Let me briefly summarize again. Does Gerdau belong in the portfolio? Yes, but only as a supplement and only if you can handle cyclicality. As of January 2026, Gerdau appears fairly to slightly undervalued. The main reasons for this are: North America accounts for the majority of EBITDA, a structurally stable market, a solid balance sheet with net debt EBITDA of 0.8, no stress during a downturn. Cash flow is clearly positive and we have no aggressive debt. The valuation is moderate and nowhere near euphoric levels. If you are betting on a US infrastructure revival and at the same time speculating on a stabilization in Brazil, keyword 2026 elections, possible anti-dumping measures against Chinese steel that take effect with a delay, then Gerdau is an interesting counter-cyclical play. But here too, to be clear, if you're looking for peace of mind, steady dividends, or predictability, then Gerdau is not the right stock for you. Because Gerdau is highly dependent on cash flow, payouts fluctuate significantly with the steel cycle. As mentioned, this is not a dividend anchor but pure cycle-driven cash flow. In short, not a steel trap, not a no-brainer, but a solid cyclical stock. Honest cash flow character, exciting for the right investor at the right time. That's exactly how you should view Gerdau. That's it for my video. I hope you enjoyed the video. Feel free to give the video a like and leave a comment if you have any questions or want to share your thoughts on Gerdau in general. If you're not a subscriber yet, I'd really appreciate it if you subscribed. I wish you successful investing. See you in the next video.